Good evening, everybody, and welcome back to another One Big Stock Market Sunday. It's me, Will, and Jordan tonight. How are we, lads?
All good, all good.
Yeah, all good. How are you, Jay?
Yeah, good, man, good. Been a busy weekend. There's a lot going on. A lot going on in last week, a lot going on in this week to touch on. So first things first, what we're going to touch on is the One Big Journey predictions. So obviously at the end of every stream or the beginning, I can't remember what we did last week, but we're going to do it at the end, obviously, of this one. We're going to give our predictions. So at the moment, I've got 2 right. John's got 2 right. Jordan's got 2 right. Will's got 2 right. And the stream are on a 0. Evening, Will, Rob. So obviously, we're doing it on a weekly candle for the S&P 500 or the SPX. So what's your thoughts on this, lads? Jord, what you thinking?
Yeah, so similar to the last week where, actually a little bit different, but so I think our reasoning for going green was for it to open low from the news over the weekend and news on Friday, and then throughout the week grow a little bit higher. And that's kind of what happened again. It was touch and go at one point. It was red for I think maybe 2-3 days, so stream was almost right. But the same thing happened again. It did open slightly higher than I thought it would have done. So when from Monday I was thinking maybe this won't be a green week, but it did end up just slightly green. So although a lot of people this week probably wouldn't have been feeling much green in terms of the SPX index, it was.
Yeah, and that's something that we're going to just touch on quickly, but obviously it's next week's topic. Evening, Tom. So what we've noticed is obviously a lot of people this week will be red. They won't be green because a lot happened. But then people will go, well, how's this up? How's that when obviously the market's finishing green? How have we lost so much in our portfolios? And that's because a lot of people hold small, volatile, high beta stocks, which is obviously something that we're going to touch on next week. But yeah, as an whole, the SPX finished green, didn't it? So I mean, do you want to do our predictions now, lads, or do you want to do it at the end?
I think we go for it towards the
end.
Go
for it now, yeah. Oh, at the end. Yep.
Yeah. Sorry. Yeah.
Yeah. No, that's totally fine. Rightio then. So first topic of things that we're going to touch on. So let me just load up the iPad. Is Will? You're going to pass you over to your screen now, Will, and Will's going to take over. So
yeah. So we wanted to sort of start each live stream just looking at the Dixie, looking at silver, gold, and also some crypto as well. But I think this week that kind of turned into the topic for this week, really, in terms of what happened to the dollar, and especially what happened to gold and also silver. So you can see it was quite a volatile week for the Dixie, and it was up about 1% on Friday. If we come to silver, so this is the story here, isn't it? This is just a gigantic candle which happened on Friday, and this is going to be a lot of what I'm going to be talking about. Gold also suffered heavily on Friday as well. That was down 9%. Silver was down about 26%. And then Bitcoin's been really struggling over the weekend. It's below 77,000 now, so it's been really struggling. So I wanted to sort of bring it all together. And why did precious metals dump on Friday? Why did the Dixie rally? And then, of course, talk about Kevin Warsh, the Trump's nomination for the Fed chair. So I think we got to go back to Tuesday to really sort of give some full context. So I just want to play this.
Well, Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
So on Tuesday, Trump said that he was fine with the dollar sinking. He said the dollar sets its own level, which is fair. He said that the dollar's doing great. He isn't concerned about the dollar going down. He said it's doing great. It's doing great. And as you can see, as he made these comments, it might be easy on this chart. As he made these comments, it's right here. So it instantly went right to its low. And this is a very low point. This is mid 95. So this is a really low point for the dollar index. Obviously, we spoke last week about why Trump wants a lower dollar. So It's cheaper for foreign buyers to buy American-made goods, and he wants to reverse the trade deficit. So he wants to bring manufacturing back to America. In this moment on Tuesday, he was signaling to the world that he was fine with the dollar continuing to slide, which did seem strange because obviously it was already very low. But obviously, as I just showed, like he said, I'm absolutely fine if the dollar goes down. So by Wednesday and Thursday, let's just go to the daily on silver so you can see it clearly. So Wednesday and Thursday are these two candles here. So sorry, this is Tuesday. So Tuesday, Wednesday, the dollar's rally. Sorry, not dollar. Silver and gold are rallying off Trump's comments. As we spoke about last week, a counter to the fiat currency debasement trade is the run to silver and gold. And obviously, on these comments from Trump, silver and gold went even higher. But this is where it gets a bit complicated. I'm going to try and keep it as concise and as short as possible. I've been researching this all weekend. It's quite a complicated topic, but hopefully I'm going to give it in a fairly bite-sized breakdown way to kind of explain it. So the CME group who run the market for silver and gold, this is the world's largest exchange. So there's silver futures, gold futures. COMEX is a massive trading exchange for precious metals. They raise margin requirements 4 times coming up to the massive crash on Friday, the minus 30% in silver. So over the last month to 2 months, they've been raising margin requirements. So from the start of the raising to the end of the raising, so the last raising was on Wednesday night going into Thursday trading, it was an 80% addition. So they basically wanted people to put up 80% more money or their positions are going to get liquidated. And this is retail, this is traded, this is hedge funds. This is a massive increase of maybe needing 10 grand to trade with 100, but then that went up to 80. So an 80% increase in what they actually needed to use. So they needed to add a lot of cash to their positions or basically margin called. I think that's why we then saw the peak of silver on Thursday, as it was struggling to deal with this massive changes by the CME group to trading and how it was going to work, because a lot of people don't just have all this cash lying around to add into their positions to trade silver. They say that they do it for volatility management, but it is just worth noting that the 3 major silver crashes in our lifetimes over the last 50 years, all of them, the CME group was massively raising margin requirement in the weeks leading up to it. So then on Friday, Trump announced Kevin Warsh as his Fed chair nomination. And of course, and he did it on Truth Social. This baffled the world. Kevin Warsh is a very famous hawk. And I think, as we all know by now, Trump wants a dove. Trump needs a dove for his policies. He's been pleading. He's been aggressively pleading in public, demanding, begging Jerome Powell to lower rates. So a dove generally wants lower rates, and a hawk generally wants higher rates to combat inflation. And Kevin Warsh is an extremely famous hawk. He is the opposite, the complete opposite of what someone like Trump would want. Also on Friday, so this was Friday morning. So this happened Friday morning. Also on Friday, sort of early afternoon our time, there was a slight technical delay, a 1 hour sort of period where there's no trading on the London Metal Exchange. So the COMEX is the most important one in the world. Then there's London, and then there's Shanghai. And London's still a pretty important player in the precious metals world. But this is only like but this is more of like a minor point. But when it became clear that Walsh was the nominee, this is when things really started to go down, to drop, because we had all this leverage, all these massive leverage positions in silver, which causes like a cascade. So it's like a vicious cycle where people are getting liquidated, then that triggers stop losses, and then more people are getting liquidated, and it cascades and it cascades and it cascades, and it goes down and it goes down. But the signaling of Walsh as the nomination for the Fed chair, that being on Friday, the dollar comments being on Tuesday, that wasn't a mistake. Trump did that intentionally. I think that he wanted to set a kind of range for the Dixie. He wanted to sort of lock in a lower range somewhere around here, below 100 for sure, but definitely above the 95.5 lows. So there was the downwards pressure from Trump and his policies on the Dixie, but it was locking in Walsh as a sort of like a ceiling raiser for the Dixie as well. So there's certain pressure. Trump wants the dollar lower so he can export more, but then he was putting in Walsh to steady the ship, if you like. I think that this was the final amount of pressure, which then took on gold, took on silver. Gold down 9%, silver down 26% at the end. I think at its peak it was around 33%. So you can see how massive effect this was. But I think the silver and the gold trade were just so crowded, it didn't take much for that final domino to fall and all those stop losses and all those margin calls to happen. I also think that by putting in Walsh as well, it was a way of bringing some stability again to the dollar, because as I mentioned last week, for the last year, Trump's been hammering and hammering too late Jerome Powell. But in actual fact, on Friday, he said things like basically that he's going to leave Walsh to it, and he's happy with the appointment. Walsh wants lower rates, and he's not going to interfere. So it seems a very drastic shift to hopefully give some stability to the Dixie and to the 10-year and 30-year yields. So I was puzzled about this. So I'm just coming to the conclusion now. So I was wondering, why Walsh? Since Friday, it seemed very strange that you would put in a very, very famous hawk into someone we know he was desperate for a dove. So it does seem like he may have changed a little. And as we can see here, he was an inflation hawk until he wasn't. So in the last year or two, he's argued that the US is in the midst of an AI-driven productivity revolution. And he wrote in early 2025 that the Trump administration's strong deregulatory policies would be disinflationary. So he's effectively saying through a productivity increases that this should naturally bring down inflation. So therefore he doesn't have to. So possibly he's changed his opinion, possibly he hasn't over the last couple of decades, but he's a man with lots and lots of experience. He's seen by Wall Street, he's seen by the world as a hawk, but there's a good chance if you look at his recent quotes or some of the stuff he said, that maybe he has become more of a dove. He does want to tighten the Fed balance sheet though, so that is definitely a more of a hawk policy. Bring it down from the peak of about 6-7 trillion to, I think he wants it probably under 2 trillion, under 1 trillion. So the Fed will definitely be buying bonds a lot less and going into some period of a quantitative tightening. But overall, I think that it didn't take much for silver to become unwound on Friday. I think it got so traded, it got so euphoric that it was basically going to be anything which was going to bring it down. Of course, there are some different theories about a CME group doing it on purpose and JP Morgan buying the dip around 74, and maybe those things happened, but I think this was eventually going to happen anyway. And with such a big shock for Kevin Walsh coming in, I think we were always going to see something. So I do expect some volatility moving forward in the stock market and in the precious metals market as we kind of digest Kevin Walsh. What kind of Fed chair is he really going to be? Because, you know, as I said, we all were expecting 2 cuts this year. We were expecting a dove. Is he a dove? Is he a hawk? I think he might actually be a dove now, but it is obviously a bit up in the air. Just one last thing on precious metals. I don't think the bull case is over. China is still importing record amounts of precious metals. They are making it increasingly difficult to take them out of the country. They're all over rare earth minerals, gold, silver. They refine massive amounts of silver, about 90% in the whole world. So I think the bull case is still there. And everything I've spoken about so far is paper silver. Ultimately, it's futures contracts on the COMEX, it's trading. In Shanghai, for physical silver, the price is still about 120, 125. So I think overall, long term, the bull case of precious metals is still there. But obviously, yeah, this was a record day, a record shake up, 26.33% down for silver.
Yeah, and on top of that, Will, there, so before we move on from looking at that, obviously, with the Fed chair that you was on about, just obviously Trump can nominate whoever he wants, but it still has to be voted in, doesn't it?
It does, but so that's what I'm trying to get across. So I think it's the best of both worlds where, as far as I can see it, Kevin Walsh will lower rates for Trump, but he's seen as the world, he's seen by the world as someone who will respect the Federal Reserve. He will do his best to uphold the Federal Reserve's mandate, and he will bring back integrity and stability and the independence of the Federal Reserve. So it's sort of like a best of both, where he should be good for the world, he should be good for America, good for the bond markets, good for the Dixie, but also I think good for Trump as well.
Yeah, and that like you say, yeah, that I agree with everything you said. I was looking into some stuff on Walsh, however you say his name. I always say people's names wrong. I was looking into some over the weekend, and Pablo made a good comment here, to be fair, which I'll share. Says, from research I've seen over the weekend, Walsh goes with whatever his popular take. So he's hawkish when it suits them, and then when he's expected to toe Trump's line. So again, it's people's opinions on it, really, isn't it? So, but yeah, if you want to crack on with what you're doing, I do apologise for putting in, mate. Just thought I'd drop that in there.
No. I think I'll stop, really. Jordan, any thoughts, mate?
Yeah, I was just going to say, I think, yeah, there's definitely been a recent shift in his alignment in terms of now aligning to Trump and what Trump needs. And I think that's extremely important because the whole sort of strategy for the US economy relies on having a compliant Fed chair in some way. We didn't touch on it last week, but another big thing about the devaluing the dollar, a benefit that comes from it, which is another sort of argument that sort of supports it's probably by design, is that a devalued dollar makes their debt, which we all know they've got loads of, about $38 trillion of national debt. It makes their debt way cheaper if their dollar is devalued. And I think that's their approach to trying to manage that debt and not make it so unsustainable, is devaluing the dollar so the debt gets cheaper. And although you're not bringing the debt down, you're bringing down basically the value of that debt. So I think that's another thing. And I think there's a bit of a feeling that the Fed chair is almost becoming a little bit of a tool of the White House at this point. If Walsh does get in, and if he is completely aligned with Trump and has done a U-turn, the Fed chair becomes a bit more of a tool rather than a separate almost entity to the White House. So we'll see what happens. As Jay said, the pass through in the Senate. I think Jerome Powell is there until May, I want to say. Obviously
he's there till May, and I think currently he hasn't decided whether he's going to stay as a governor until 2028 or he might just fully leave. So
yeah, so we'll see what happens.
I think you're right, Jordan. I think I think out of all the options Trump had, because he's been bashing the Federal Reserve so much over the last 12 months, this was basically the best pick out of the options he had to kind of bring some integrity back to the Federal Reserve, but probably still being some kind of, not quite puppet, but, you know, towing what Trump wants, but maybe seemingly not just doing anything and everything he wants.
Yeah, and I think that's where it throws a spanner in the works a little bit, because everybody was probably expecting him to, as they say, one of his boys or whatever in that situation. But then he's completely throwing the spanner the other way, and everyone's sort of sat back and gone, "Oh, wow, okay." So it sort of throws a spanner in the works, doesn't it? So on the next thing that we're going to touch on, so obviously we'll share this one first. So the House to vote Monday evening on Senate funding deal, if passed, which goes on to the next one, sorry, which is US Speaker Johnson confident he has the votes to end partial shutdown by at least Tuesday. What's your views on this, Will? We'll start with you. Do you think it's going to be a short-term noise? Do you think this is going to go leaking over and it's not going to get passed and we're going to have a really long shutdown again? What you got on this, Matt?
Yeah, I think we have a short shutdown. I did say a few days ago, I think on Tuesday, Wednesday, I think we will have a shutdown, but I think it might be sort of 1, 2, 3, 4 days. Hopefully, fingers crossed. Obviously, we don't know. I don't think that the Democrats or the Republicans want to shut down, especially Trump, especially the So no, I don't think it'll last long, but the Democrats could dig their heels in. I think sometimes we sort of we as in generally we and I don't just mean in a one big journey, just generally like a retail traders. I think we follow the government shutdown because it's quite an easy story to kind of understand and cover. You sort of think, well, is the government open or is it not? Obviously, government open, good. Government shut, bad. Right? In like very simple terms. But I do think sometimes it can be a bit of a smokescreen. And of course, it's important, but I don't think it's that important. It definitely needs to be resolved. I don't want it lingering on for ages, but I do think that the Federal Reserve pivot and sort of reassessing what war should be like after we expected a mega dove, now getting a possible hawk, probable dove, that is, I think, a lot more important and will impact the markets with more volatility and more uncertainty, more than the government shutdown will.
And what's your thoughts on it, George? What do you think about it, Matt?
Yeah, probably similar. Maybe it's a bit like a victim of listening to the headlines and absorbing what they want you to sort of think. But it does feel like this one going into the shutdown, there's less barriers and more optimism of a resolution than the last. And the last one felt a little bit more like they were so polar opposites of each other, and there was absolutely no progress and no sort of wiggle room from either side. And this one feels different. So if I were to guess, I would also think short shutdown. Whether that will be the case, obviously we'll wait and see. But it feels like they have already made most of the progress before the shutdown, whereas last time they were making it during the shutdown. And that's why we had the longest shutdown has ever been. So hopefully only short. It would be nice for it to be short and have less disruption, especially when we come into more data side of things. Obviously, we just have to wait and see.
And my take on it, I mean, he's obviously we have a short shutdown, and I think that's how it'll be as well. In regards to last time, they reckon it's going to have a hit on the GDP this quarter. So obviously, we don't want to have a long shutdown where it affects the future GDP number. But yeah, like you say, I agree with that. They've made a lot of work pre this. I think, like I say, people always seem to think, like I say, when you have a shutdown, it's going to affect the markets massively. The market's actually been affected this weekend for everything probably else more than it has this. I mean, last time Will, you'll have to correct me on this if I'm wrong. Last time we had a government shutdown, we rallied for most of it, didn't we?
Yeah, we did. Yeah.
Yeah. So have you boys got anything else to touch on this, or anything else you want to add to this before we switch over to the next thing? Or
I was going to say on your point there, it's a shame that, in my opinion, it's a shame that GDP data gets taken with as much significance as it does, because to me, GDP is quite a flawed sort of metric. It counts all the money that's moving around. It doesn't really reflect how much is actually sort of gained. And if you break apart actually what counts towards it, then usually things don't look maybe as, if GDP shot up lows, they might not look as green as they look on paper when you look into it more. So for instance, the last last month or so, or last 2 months, has seen, and last couple of years as well, has seen lots and lots of gold being exported and imported by different countries, and those massively swing their GDP numbers. But it's not real, in terms of GDP, it's not real money gained by the country. It's just something that's traded and its value's been traded back. And it does skew GDP. And with the UK, it's especially relevant because a lot of the time when we have positive GDP growth numbers in recent history, and we've had them, a big portion of that has been to do with gold. So actually, it doesn't mean much in a positive way. For instance, in those circumstances where the GDP went up because so much of it was down to just that. And similarly, sometimes when the GDP numbers drop down, it's because that, for instance, that gold side of things, which is on a massive scale, has dropped or slowed. So I do think there are other metrics out there, but unfortunately GDP is still taken as quite a high focus for a lot of people.
George, what do you think about what I said about that the Federal Reserve pivot and wash is probably a bigger story than the government shutdown?
Yeah, for sure. I think that we can learn a lot from the amount of market movement and reaction we saw just across the last year with Trump and Powell, and how much that has affected things. And similarly, if we then take the last shutdown and think about how much that affected things, Powell, rhetoric around Powell and guesses about what's going to happen, what's he going to say, and what he has said and hasn't said has had a bigger impact than the government shutdown being a thing. So I think you're right in terms of going to this potential government shutdown versus looking at the Fed chair shift and pivot. That is a bigger story for me and my eyes as well. Yeah, 100%.
And just to touch on that, because I was just looking for something I was reading the other day. Obviously, there was a lot of, especially last year, I've seen a lot of new investors coming into the market that might think that this stuff is like the end of the world when they see a government shutdown. So this list I'm going to show, I know it's a bit zoomed out, so I do apologize if it's not clear as day, is a list of every shutdown in the last 100 years, etc. And it's a lot more common than people might think, just not 43 days common. That's the difference.
Yeah.
So I think when people see two in such a short space of time, it sends alarm bells off like the world's ending, but it's not actually the case. Have you got anything else to add to that, Will? I feel like you had something then.
No, well, I just really want to emphasize what I said 5 minutes ago, that I do think it just sounds in our brains like, what do you mean the government shutting down? Like, how can that be good for markets? But in actual fact, that it doesn't. I know it doesn't sound logical, but it doesn't matter that much unless it rumbles on and on and on. And of course, it's good to keep up on. It's good to keep up on all the stories, but I just think it's such a simple concept to understand that that's why all of us kind of take it in. Whereas in reality, I've literally spent 12 hours researching all about silver, Kevin Walsh, the Fed pivot, and everything. So it takes a lot more time to really delve deep into like the Federal Reserve, the CME group, and everything I've done over that, like over those 12 hours, than just taking 5 minutes of the government shutdown. So I do think it's important, guys. And obviously it's something I'm aware of next week, but I don't think it's perhaps a bigger story as sometimes we talk about it as.
And Pablo's just said here, Will, I think the initial shock of Walsh being a candidate shocked the market, but after the big boys have had the weekend to review him, I think it will be less of an issue.
Yeah, possibly. I think it might be a bit longer than just the weekend, but yeah, I think it will take time. Then obviously now no, because I think we don't truly know where his mind is at until he does his first speech as the Federal Reserve chair, because it's just such a shift if you look at some of his quotes from 2010, 2011 to what he said last year. So yes, I do think there will be a natural digesting period, but I don't think it will be as quick. But that also doesn't mean that there's going to be constant volatility until May. I'm not saying that, but I do think these things take time.
Yeah, no, I agree. I agree with that. Is there anything else you boys want to touch on this before we move on to the next thing?
I might just repeat a message I sent the server, which is we've gone from basically news of what's become quite predictable Fed chair in Powell, where the remainder of this year and onwards we expected a slow in rate cuts and a few pauses and keeping rates flat, etc. And when you change that and someone new comes in who isn't predictable and needs some time to be predictable, and as we all said, get an idea for what kind of steer they're going to take, then of course there's going to be a big reaction to that, because all of a sudden there's an added amount of unknown, which was previously not a definite known approach, but something that was more easily to predict. And obviously with a new person, then it's a new gap that's coming.
And while we're on this, Will, before we switch on to the next part, a lot of like, I don't know if you want to do this later on in the stream, a lot of people will have bad news sources and stuff to touch on. Do you want to touch on that now, or do you want to touch on that later?
So I'm actually coming to that literally next topic, mate. So we can sort of
Happy days,
into it.
yeah. So the next topic then, Nvidia OpenAI investing updates. So we'll throw back over to you. You take the. Oh, I hate it when it does that. There we go. There you go, mate.
Cool, wicked. So yeah, so I actually wanted to cover this topic anyway, and then it kind of merged into a whole different topic. So this was, I think, came out on Wednesday. The first headline, the 100 billion mega deal between OpenAI, and obviously Jensen Huang has said that it's now on ice. So Nvidia, OpenAI. This is a massive story. This can bring down the whole AI trade. What do you mean that the most important, biggest AI company is not going to go through the deal with the most important, biggest AI chip company? Like, this is huge news. This is massive. And also this has such a general knock-on effect to Oracle, AMD, Broadcom, Microsoft. There's loads of companies which aren't quite fully in bed with Sam Altman and OpenAI, but they've done big deals with them, and there's already a lot of concern about, you know, what on earth is happening with them. And then I think it was fairly late last night, I saw this video, and I'm not quite sure where he is, but I think he's in China, maybe Taiwan.
That's nonsense. Yeah, that's complete nonsense.
So she says, so I've heard that you're not very happy with OpenAI.
We are going to make a huge investment in OpenAI. Yeah, I believe in OpenAI. The work that they do is incredible. They're one of the most consequential companies of our time, and I really love working with Sam. And I think it's yeah.
So straight away, sort of 1-2 days later, this massive exclusive the Wall Street Journal have got already now seems like it's not quite true. And then I saw this video today.
We never said we were going to invest $100 billion in one round. They invited us to invest up to $100 billion. And of course, we were very happy and honored. We never said we were going.
So it's just so incredible how these massive stories can come out, but they're not often true. But in the world we live in now, this is really important. Algos trade on these news. People trade on this news. This could be one of the most detrimental headlines there could possibly be. But as usual, there's a bit of fake news. There's wording, semantics aren't quite right. Jensen said it was always up to 100 billion. The Wall Street Journal is saying that they're not going to go for the 100 billion. But I think just these things are so important. And this is the Wall Street Journal. Like, this is a massive publication in the US. There's basically the New York Times, and the Wall Street Journal, and these are some of the two sort of top 5 biggest newspapers in the world. So I think it just shows you how important it is to don't react too quickly to news and to sources, because and I do joke about certain sources and certain media companies in the Discord that they're just terrible, and they always get things wrong. The Wall Street Journal doesn't tend to get things wrong, but it has here because of semantics, because of wording, and I think it just shows, like, I think it's just a good example to not be emotional and not be too reactionary. Look for other sources, wait, and then it also comes on to something Jay said about 5 minutes ago. I think it's also important to really check the source as well. Where are you getting your information from? Is it from some crappy aggregator account with Guru or Giga or BTC Legend in their app? or is it a reputable name? And we have listed, I think, Jay, in your ebook, I think there's listed maybe 8-10 Twitter accounts with which we rank really, really highly for news. And yes, sometimes they get things wrong, but it's a hell of a lot less than these watcher, giga, guru, Bitcoin nerd accounts, because like they're trying to get sources and they're trying to be as accurate as possible. And also, I personally don't use TikTok, and it's fine that you guys do. And obviously it's a huge platform, but also just be wary of when people are seeing things on TikTok and then claiming it as fact, and or obviously seeing it on X and claiming it as fact. I saw one story last week that Elon Musk bought 50,000 Tesla shares, and that was on TikTok. Well, why would he do that? Like, that's about, I think it's about $5-6 million. Like, he bought 1 billion last year. So what, like, you know, it just doesn't make sense. So check the sources, but also, does it actually make sense as well?
Yeah, and to touch on the back of what Will just said there, the link is in the description, by the way, for the ebook. It's free, so download it. It's got tons and tons of information in that I've built over time. Like Will just said, there's actually sources that we have to delete out of the Discord because it's misinformation that's wrong. For instance, like we sent a guru one on Friday that just said government is shut down. Just spikes fear into it. There's no facts behind it. There was no source into it. So it didn't give credibility to anything really. Pablo, 100% agree with that, Will. Most of the financial media is paid for by trading companies and it's designed to make you act. I agree with that totally. Like I say, some of these, if you don't get the right sources from somewhere, emotions can come into play then. What's your view on any of that, George? You got anything to add to that as well?
I was going to say it's similar to, you'll see a lot of videos on YouTube of people going through a stock and putting all these pieces apart about why it's the best thing to invest in. And then if you look in the description, they might say they've been sponsored by that stock to talk about it and make a video on it. Then of course you've got to have alarm bells ringing of there might be a little bit of bias here. Maybe this source isn't the greatest source. And I think it's something you've got to do. Some of us would have picked up in school. They would have taught you to get multiple references for any one answer that you're trying to find. And I think you should do the same with anything, and especially with investing. Check your sources, check how reliable your source is, how much they are likely to be in the know, what kind of reputation they have. And if they've been around for years and years, never got anything wrong, there's a lot for them at stake, a lot for them to protect before they put something out and say this is what's happening. And also, just if you can find more sources that are also credible saying the same thing, then your sort of belief in what you're reading being true should go up and up and up. But no matter what the source is, I think if you only see one source saying something, just wait a bit before doing anything on whatever that is saying, because you never know.
Yeah, and that's what I mean. Sometimes it's better to not overcomplicate it as well. And obviously, you'll see some of the stuff we share from X each week. So we won't really, like Will said, people always get stuff wrong. I mean, I've got stuff wrong myself before. People get stuff wrong sometimes. But there's some accounts out there. I mean, I'll follow one account just for the charts that they show, but the stuff that they put is so fear-mongering. And if the average person read it, I like the charts, but the actual text that goes with the chart is so wrong all the time. The market's crashing and Bitcoin's done for and gold's going to crash and all that. And it's so fear-mongering, but the charts are helpful for, so I use the charts. Is there anything else you want to add on to that, Will?
Yeah, can you just bring up Pablo's comment again, mate? So,
of course, can, mate.
Pablo, I do think that's correct, but I think it's not actually as cynical as that, as maybe quite as what I'm talking about. I think in terms of X anyway. I think with X, people basically just want to make money, so they want to make money from X. So that they're trying to get viral posts of either completely made up news, slightly kind of fake news, or just twisting the truth news just to get retweets, to get quote tweets, to get comments and stuff. So yeah, I do think that's true, and especially with some lower level publications. But I think with X, a lot of it is just people trying to make money. And just one final point, and I know that obviously we all talk about the Discord positively because we're all part of it, and we spend a lot of time there. But genuinely, this is one of the reasons why I love being in the Discord, and I love having the community as well, because when people bring some FUD, whether it's true or not, when people are worried or scared or when certain bad things happen, there's enough of us in there who have gone through it now anyway, and just keep a level head. And before I found it, when I was on Reddit or I was following random X accounts myself, God, you can really get in your head. Like some of the smallest things can scare you, and like without context and without knowledge and without the precedents from history, you can really think like, damn, like this is different this time. It's going to be a 2-3 year crash from April or whatever. So I do really rate the community aspect which we've built to calm down that FUD, and say to someone, no, that isn't a good source, or don't listen to that, or yeah, I know what you're saying, but, and just explain it in a different way. So if you are feeling like you're experiencing a lot of fake news or worried bad news sources, then obviously we've got the Discord, because I think in there we try and filter out the crap, to be honest, of in terms of shared news sources, and try and be a community too. So yeah.
Yeah, and then Pablo said here as well, adding to George's point, same with AIs, always prompt to use official sites. So basically, when you use ChatGPT, I'm not sure about all other sites, they will prompt the link so you can then check where the news is coming from and see if it's a reputable source as well. Some people obviously use these AI apps and then don't even fact check the data to make sure that's right. So that was something to add to that. Is there anything else you boys want to touch on that, or are you happy with what you touched on there?
You're happy, mate? You're all good.
Okay, so the next one we're going to touch on, George's going to share these, so they're going to be earnings. George, have you got all the earnings, or is Will showing some as well?
I'm going through Apple and Microsoft.
Okay, and then Will, have you got some to touch on as well?
Yeah, I got Meta, and then we'll just and then I just want to make just 1 or 2 comments about Tesla as well.
Okay, do you want to share your screen again, Will? Because I think you closed your screen off at the bottom,
cool.
So that's fine. Right, George, if you crack on there, mate.
Cool, yeah. So first up, looking at Apple, and as you can see from the screenshot here, they beat both the analysts' consensus estimates on both their earnings per share and on their revenue. It was a really big earnings report overall, both in terms of the numbers that were shared and achieved and the information they shared as well. And most of their sort of number growth was driven by their sale of iPhones and from AI features. And I just want to just start, when I go through sort of numbers and increases, for anyone who's new to quarterly earnings, doesn't know too much. So when we say quarterly year over year, this is all for the 1st of October to the end of December. So the last quarter of last year, they reported just this week gone. And when we say year over year quarter increase, it's from the last quarter of 2024 compared to the last quarter of 2025. So it's comparing the same quarters each year, because some of these companies are quite cyclical. Their Q4s might be their biggest earnings every single year. So they're comparing the 2 Q4s rather than last quarter to the quarter before that, because it doesn't make as much sense. So it's looking at those sort of 12 months apart, those 2 quarters. So for Apple, they had a 16% year-over-year increase on the revenue to a new all-time high of 140, almost 44 billion, which is just a crazy number. Apple's revenue is really, really high. I think Santa Claus was pretty busy in Apple stores over Christmas, because they had lots of revenue growth there. And I think they said there's now 2.5 billion Apple devices active worldwide. So pretty much you can go anywhere in the world and you'll see Apple devices, as you already know. iPhone revenue, as I said, is their sort of main driver and their main sector still. That went up to 23%, to over 85 billion. So over half of their revenue is to do with iPhones. According to Tim Cook, the CEO, said that a lot of it was to do with switches from Android to Apple. I'm not really sure if he can measure that or know for sure. But just a statement that he threw out there, and that's a good thing to practice the fact checking on, actually see if there's any actual evidence of that. And then really importantly, you might have seen in the news about sort of China, so to do with the tariffs, and also their China sort of sales and market had been declining recently, same as Tesla. Their market in China actually was really strong and rebounded really nicely. So it's up 38% year over year from last year, which is a really big increase. China's obviously a massive market, so for Apple to have growth there and really strong growth is really important for them. And then their services revenue grew up to 30 billion. That's a 14% increase. And they have their biggest profit margin in their services sector. So of that 30 billion, I think about 75% of that is profit. So you're talking 23 billion pounds profit, dollars profit, sorry. And that's really important in an age where everyone's spending a lot of capex. having that buffer zone, that safety net is huge. So to see that big growth in their most profitable sector of their business is really big. I think the only sort of decreases were on their wearables, so their AirPods, and then Mac revenues. I think some of that was to do with supply chain issues, but they were only very small decreases, and the increases you just heard were all double digit, which is a great sign. Anything above 10% is usually like a sweet spot for people to react very positively to, more so than 8% to 9%. They react better to 9% to 10% just because it looks a bigger number with double digits. Their research and development costs were up 19% to 18 billions, as we've seen across most big stocks, big tech stocks. Lots of capex, lots of spending, a lot of that to do with AI and the infrastructure around that. So nothing as not expected. I don't think 19% is too blown out the water from what we're used to seeing as well either. And then just in terms of what they were saying looking forward, so those are the numbers, but looking for the next quarter, they expect another 16%, up to a 16% increase for the next quarter, so the same as this one. So more steady growth, which is great to see, and a profit margin of almost 50%. So lots and lots of free cash flow coming in for Apple. And then a few just the rhetorics. I talk about sort of numbers meaning one thing, but actually rhetoric sometimes hide or show the most important parts about those earnings calls, and you can inform yourself more for the rhetorics and the guidance than the actual numbers that they share. So a lot of the rhetorics that Apple have been sharing recently are about embedding AI as an overall sort of structural transformation of their devices and their company, rather than seeing AI as a feature. So it's very become like a core pillar, if you like, of Apple, rather than this is Apple, we have our devices and we also offer this AI product on the side. It wants to be completely embedded and part of Apple, which you've seen from other big tech stocks as well. And then just on the sort of the AI space more generally, they've obviously got really strong competition from the likes of Google and from OpenAI in the AI space. And Apple's been one that's been quite quiet on the AI space. They don't have their own LLM. Siri has been around for a long time now and is, of course, nowhere near as good as other AI bots that you can talk to and get answers from. And of course, Apple have made a deal with Google so they can incorporate Gemini and stuff into their own devices. So Apple's been quite quiet on the AI front, where we've seen lots of noise from Microsoft, Meta, Google, and Nvidia, etc., and Amazon as well. So Apple are doing a slightly different approach to the others, where they're doubling down on their approach of exploring and trying to create in-device processing for their AI products. So where we have lots of deployment and spending on data centers and lots of building of data centers, the on-device process of AI wouldn't need that. It would completely negate go into a data center. It would be all built within the device itself. There's obviously a few big USPs there, one of which is your AI sort of requests and information is completely private because it's hosted on the device and doesn't get sent off to a data center. It can be done much more cheaply because you're not then financing and paying for big data centers with massive energy and water consumption, and obviously the tech cost itself of those data centers. It takes out basically a step of the process. Now, I have to say against that, there are no capabilities of that at the moment. There are no current inbuilt chips into phones that are powerful enough or can run their own inbuilt LLMs. If Apple were to create one itself, it can't just immediately put those into all of its iPhones, and then you've got every iPhone with an LLM built in that excludes data centers, that is cheaper, that makes more profit, all that sort of thing. That doesn't exist at the moment. But that is the approach that they're going down. And that's why I think we've seen, for the meantime, they've been making deals with Google, for example, for Gemini, because they see that as one of the best products they can get their hands on now and using their products now as a stopgap until they do their own thing. So they're taking a slightly different approach there, and something to watch. It's something that I'm watching closely. I'm not on Apple personally, but that's the main sort of bull case for me, is watching their AI space and the different path that they're taking. And if I do invest in Apple, it'll probably be because of that. So something that I'm watching at the moment. And then just an interesting graph here, which just shows, as I mentioned, some of the revenue numbers. And you can see here 4 of the big tech stocks. And Apple and Amazon for me stand out on this graph from the spikes that you can see. So they're very cyclical. Those Q4s always big revenues, and they're a bigger jump from their usual, whereas the likes of Microsoft and Google or Alphabet are much more steady, although Google does have a little bit of a jump on Q4. So you're going to expect big numbers, of course. as I say, Santa Claus is always busy in Apple stores around Christmas time. Do you guys have anything to add on Apple at all? Or do you want me to move on to Microsoft?
So in regards to Apple, I'm just going to ask a quick question so we can see it. Do you say you've not got an Apple phone, George?
I do have an Apple phone.
Oh, you have an Apple phone. What about you, Will?
No, I've moved to a Chinese brand phone.
Boo. So 2 out of 3 of us have got Apple phones. Like you say, I think it's when you look at the numbers, but for how many handsets there is out there for our iPhone, I think it's absolutely staggering numbers, like you said. I've always thought, I think the battle with Apple and Android is the same type of battle you have with your Xbox, PlayStation, and stuff like that, whether it's Spotify music, Apple music, whether do you know what I mean? So it depends on those. I think there's always going to be, but I think that's always healthy as well because it causes the friction between it, which naturally is always good when you've got stuff in that space. Have you got anything to touch on it, Will? Or
I do think Apple will be very interesting, Jordan, when we sort of move over the next 1 or 2 years to competing with Meta and other companies with AI wearables. You know, will Apple come out with sunglasses like Meta? Will Apple come out with some earpiece, or, you know, like, where is AI wearables going? And will that happen under Tim Cook? Will it happen under the new CEO? But you think with the innovation, the technology, the capacity Apple have, at least under previous leadership, you'd say they will be at the forefront of leading the AI change with wearables, phones, glasses, watches, rings, you know, whatever it is, hats. But maybe not so much anymore. But to be honest, I do have confidence. Like, it is Apple. I have a lot of confidence that they will pull through. And even though they don't have their own LLM, as you say, I'm sure that they're going to end up with a really, really good, popular AI wearable product. I'm just not sure what it is yet.
yeah, and I think something I was going to touch on with my mind's just gone blank with what I was going to say. Oh yeah, I think I read something recently about Apple really doing something with the wearables, aren't they? That's something that they're really focusing on to get that type of glasses like the Meta glasses, etc.
Yeah.
It
Yeah,
seems
so-
like the next obvious step. I think obviously a big part of Apple is their ecosystem. If you buy an iPhone, you're probably going to buy AirPods because they go with the iPhone. You're probably then going to buy an Apple Watch. You're probably going to buy this. All the devices link up, and the whole ecosystem, of course, is designed to give you as much sort of user comfort as possible, but also as much reason as possible to only buy and continue to buy Apple products. And that's seems like the next obvious thing for them to move into and to launch properly. To just build out the ecosystem even more. I think as well, if I were to sort of take away 2 overall summaries of Apple's earnings, it would be a mixture of resilience, a sign of resilience, but it seems a bit silly to say of a company that's around about 4 trillion and one of the highest valued companies in the world. But they had some recent earnings where numbers didn't look so great, or they weren't growing as much as possible. But we've seen the opposite of that. We've seen numbers grow massively and, importantly, grow big outside of the Western world. The Western world, be it North America, Europe, etc., is very Apple dominated. We know that. We know more people have iPhones, for example, than Androids. But outside of that, Androids are massively more popular than Apple products overseas. So to see, for instance, in China, that grow by so much, by 38% from Q4 of last year, which was one of the main concerns, was those sales slowing. So those grow so much is a great sign of that. And then secondly, I'd say the optimism around, we're still on the resilience actually. There were lots of concerns around how tariffs would affect Apple, because much of their production is in China, in Southeast Asia, in countries which were going to be facing really large tariffs on the products and stuff that's made there, like the Apple products. And when they come back over, that then might harm Apple's profit margins or their amount of sales, etc. And what they are doing now is they're building out their production capacity in India, which would be much less affected by the tariff rates. They're lower tariff rates for the moment, at least. So they're looking to sort of move some of their production pipeline, and they're bringing that forward and accelerating that. So that also builds out a bit of resilience for their supply line and their manufacturing, and that side of worries of how tariffs might impact Apple, because Apple and Nike, I think, were the main 2 companies that people instantly thought most of their stuff is produced overseas. How is that going to affect them? And then, yeah, just the optimism from hopefully what they've been quietly working on. I think a lot of the time when something does go quiet, it's because there's a lot happening behind the scenes. So we'll see what comes out of that. I don't think Apple are a complacent company. I think they'll be working on something for sure. And they've just taken a different path where everyone else is announcing all these major deals and major revenue streams from the AI path that they've taken already. I think Apple's is just a little bit further down the line.
And just before we move on from that, Jordan, to Microsoft, obviously when the new iPhone, the latest iPhone came out, there was something about sales were down on what they thought, etc. As we're getting to our 20s now, I'm nearly at 30. When a new iPhone comes out, do you upgrade all the time, early upgrade or anything to get the new device? Or do you just are you not that fussed about having the most recent device all the time?
Yes, I'm laughing because what's next to me at the moment is an iPhone 10. So pretty old. Yeah, I'm not a big fan of, I'm not like a big tech fan of, I need to get the latest product, or the latest product's been announced and I'm really excited because it's got this and this and that. I'm less fussed about that. So maybe not a great example. I know there's other people who've got much newer iPhones than me. But the iPhone 17 does seem to have, at least sales wise and numbers wise, gone down much better than the 16 did the year before. So that's positive.
Yeah, because I was just looking because I don't even know what iPhone I've got. I've got the 16 Pro, so that's the one that I've got. But when you talk about products, and I know Joel's, I think it was, Joel said something here. Not even iPhones, iPads, Macs, AirPods, so many things that make it harder to change brands. It's so sticky, which is very true because I buy Apple iPhone, I've got AirPods, Apple Watch, iPad. You always stick to the same thing. Have you ever bought like something Android and something Apple, or do you find you stick in that same path also?
So I had Android before I had Apple. I've had a Samsung. I did have a Huawei, so a Chinese phone at some point. And then I've had iPhones since sort of 2018, 2019, probably about the same time I bought that one, to be fair. But you're right, like that it's exactly that. It's the ecosystem that's designed there to have a bias to when you need a watch. Well, you might as well get an Apple Watch because you've already got an iPhone, you've already got an iPad, and all this pairing stuff makes it feel much more suitable than getting a different product, and then it sort of sticks out. And same with the software. You're used to how iOS functions, so you've got the same across all your devices rather than having a different one on a different device. And it's that constant bias of, let's say a product is an iPhone, it was slightly worse than the newest Samsung Galaxy, for example, and maybe it was even a little bit more expensive, but the familiarity and the fact that you've got all these other devices that work in the same way and are part of the same family is what swings your opinion to still stay anyway. And that's the whole benefit and the whole point of the ecosystem, as much as it's to, they might say, to boost sort of customer satisfaction and provide as much as they can to their customers. It's designed there to keep you buying their products and keep you just under their umbrella, if you like.
And I think that's something to touch on sometimes, what people don't think of how impressive Apple and Samsung have been over the years, because we've some nostalgia for it. We've seen some phones in our lifetimes, BlackBerry, the BB, we've seen Sony Ericsson, Nokia. I know Will's laughing to himself there.
Yeah.
So we've seen those phone brands die out a lot more than the brands that we use these days, and they stay relevant, and they do stay relevant all the time, which is important. So yeah, that's all I've got to touch on that. If you want to move on to Microsoft, Matt, if you've got nothing else.
I guess also Apple's managed to make themselves a massive cultural thing as well. Like people grow up in school and they've got pressure to buy an iPhone because of the social image side of things, and they have that way more than any Android company does. So it's a big benefit and plus side for them as well.
And the thing is, for me, before you touch on that, and the last thing on Apple, I have everything but a Mac. I can't get to. I prefer Windows.
Me too.
Whereas I don't like the way the Macs work, but I guess that's change. And I don't like. I've used Windows all my life, so it's like I use Windows. I've got everything Apple, other than software. I use Windows still. Microsoft.
We obviously had a massive week last week, loads of big earnings reports, and the other one I want to talk on is Microsoft. So again, a double beat for Microsoft, both on the EPS as with Apple and both on the revenue. I think the shift that we've seen from Microsoft being obviously very much known for being a software company over the past sort of 5 to 10 years, shifting into AI infrastructure company is very apparent. It's very apparent when you look into the numbers. So their revenue for the last quarter was just over 81 billion, which is up 17% year over year. And of that, 51 billion was related to Microsoft Cloud. And that was up 26% year over year. So it's growing faster than the overall revenue, and it now accounts for more than half the overall revenue. Of Microsoft Cloud, specifically looking at Azure, their revenue grew 39% year over year. So Azure is like the more comparable version to Google Cloud or AWS from Amazon. A little bit complicated that Microsoft Cloud and Google Cloud aren't the same thing. I think it's because Microsoft is a software company, so their definition is a slightly different one to Google's, so how they sort of group things together. So Microsoft Cloud includes Microsoft Azure, which is the main comparable thing, and then it includes sort of Teams and other bits and pieces, and Office 365, for example. So just looking at Azure, I think that's about 40 billion. So even just their comparable Google Cloud AWS side is also about half of their total revenue. And yeah, grew 39% year over year. So it's also the fastest growing part of their revenue. So it's every year, every quarter, it's becoming a higher and higher percentage share of their overall revenue. So very much an AI infrastructure company for the most part at this point. Copilot, so their AI sort of platform, grew 160% year over year from last year. So massive growth there, as we've seen across all of the pure AI companies, if you like, with OpenAI and Google and Microsoft, Claude, etc. And then the big talking point, which a lot of people would have seen from their earnings report, is that their backlog, their RPOs, which are effectively their contracted work that's not yet been billed. So it's stuff that they've agreed to provide for someone. They've agreed to pay them a fixed price. They just haven't got to that yet for, let's say, capacity reasons, or they're still building out the infrastructure, that sort of thing. Their entire backlog grew 110% from Q4 of last year to 625 billion, which is just a crazy number. But I will come on to that in a second, because there's more to that than just the numbers have grown a lot. That's really positive. So lots of positive growing numbers there. I think the only numbers that went down was on their gaming side, so sort of Xbox, etc. Santa wasn't busy in Xbox stores like he was in the Apple stores over Christmas, that's for sure. Those dropped a lot. I guess a lot of it is to be expected. It's in the later period of its current sort of generation, so the sales are going to drop off naturally. Maybe people who bought them last Christmas. Then some of the rhetorics, which I think is the more important part around Microsoft. So their chief financial officer and their chief executive officer, both of them spent a lot of time talking about their high capital expenditure and the high spending. And they said that they framed that around that being the need for meeting their high demand. So owed into their big backlog and how much business they're actually making, rather than it being a speculative, we're spending on this to see if this works and that sort of side. So they're trying to build some reassurance that actually what they're spending on is directly related to confirming and receiving revenue, rather than something that's not yet paying yet. So they were quite careful to talk on that. They issued some light warnings about the next quarter, so the Q1 of 2026. They said there might be some tighter margins there in terms of the profit. Revenue should likely still be up, but the profit might be down because of that increased investment in the AI infrastructure. So continuation of the high capex that we've been seeing. And then their CEO also said sort of the same thing as the Apple CEO about framing AI less as a product and a feature, and more as a sort of new foundation to the company, a new sort of way that the company works. So they all seem to be trying to downplay AI as a product or feature, and saying it's much more serious than that. It's a real turning point in sort of the way the companies work and the tech that they provide. And then the really big talking point is that for the first time they disclosed how much of their backlog, so their 625 billion now backlog, it was related to and directly tied to OpenAI contracts. And that number was about half, which I think was much higher than all analysts and other places were expecting. Why they chose to do that at this point, I'm not sure. It might be a blend of sort of trying to show how much the confidence and strength there is in this partnership between themselves and OpenAI. Maybe thought that'd be a beneficial number to reveal. I think how a lot of people interpreted that was they are now over reliant on one client and one customer, which may not be such a good thing, being all in on one partner. And I think that's the main reason why we saw Microsoft share price drop on earnings, even though numbers went up, and they went up by quite a lot. Most of those big increases that were above what was expected were because of the OpenAI numbers factored in. And it looks good on paper, seeing all these big deals and so much money coming through from OpenAI. But on the downside, it shows and sort of all eggs in one basket kind of approach in terms of their cloud side and AI side, which is, as you saw, becoming their major and their main share of their revenue is to do with that side of things. And if OpenAI is almost their all eggs in one basket kind of client, then that's quite a sort of a high risk, high rewards approach. I think Microsoft and Apple and Google and Amazon and Meta, all these big tech companies, they're very international. They have lots of revenue come from overseas. I think Microsoft's Azure platform or product, about 40% of the revenue comes from overseas. So they are ultimately an international company. And I think that diversity of revenue and how many clients and customers they have across the world is a strength to have. And the OpenAI sort of numbers that were revealed show a bit of the opposite of that. It shows less diversity. It shows a higher dependency on one partner and one client. And if that partner or client isn't successful, and if that partnership isn't successful, then that's going to have a much bigger impact than if you had 10 different clients, all with an equal share of your business and your revenue. So I think that was the main reason why Microsoft went down. It was a reaction to that loss of diversity, because I think it's a main appeal and a big attraction to Microsoft over the years has been how diverse the company is, how resilient its revenue numbers are. And I think people feel it's a little bit less resilient without things changing yet. There's a lower chance of that resiliency if it is more with one person, and so much of the numbers are made up by one customer and one client. And I'm sure people have seen this graph already. If you're in the survey, you definitely have, and it's obviously around just the OpenAI sort of centered, Nvidia's here in the middle, but the OpenAI sort of centered deals of all these partnership announced with different tech companies involved in the AI space. And a big focus about how much of that is just sort of circled around, and if one link breaks in this diagram, then what other things start to break and what other things start to go wrong. So there's a bit of hesitancy around that sort of whole makeup as a whole. And I think Microsoft announcing so much of the numbers being involved with that particular sort of cycle and that hesitancy coming in is the reason for Microsoft seeing red. Overall, I do like Microsoft. I'm not invested in it myself. I think it's for a long time been a very consistent growth company. It's been something that's not had too many soaring peaks, but also not too many massive dips. It's just kept going up and up and up year over year at a very consistent and steady rate, which is what you like to have and like to see. Whether that will change, we'll have to wait and see. I'm not sure how I'd predict for Microsoft. If OpenAI could be a roaring success and then ultimately it doesn't matter, and then Microsoft is a great buying price at this point. But that's my whole sort of perspective and opinion of why we saw what we saw.
I think it's important, George, just to make clear that it's not just because they're maybe over reliant on one company. It's because it's OpenAI. And a little bit of what I was talking about earlier with the whole Jensen deal, like OpenAI if OpenAI failed, let's say, then I think that would massively bring down the whole AI trade. They are probably the most important sort of software AI side business currently. Obviously, Google's taken massive steps in the last 6 months, but this is a company which have agreed huge deals with loads of companies, and there's loads of opinion about, are they bringing 20 billion worth of revenue, yet they're committed to spend 1.3 trillion. So I think, yes, obviously I agree with you, but I think it's just important for the listeners just to make clear that it's not just the over-reliance on one company, it's because it's the most difficult to place sentiment right now in terms of OpenAI, and it's OpenAI they're being reliant rather than someone else.
Yeah, I think you're right.
Yeah,
I think at the center of the AI bubble fears is OpenAI. So anything that people are worried about to do with the AI bubble is directly or indirectly related to OpenAI, and that's the main sort of pivot or like teetering thing, if you like, where if things do go well, everyone will be really bullish, and if things don't go well, things will be a massive overreaction.
Yeah, I agree on everything you've both said. That's where that AI bubble sort of mindset comes from, isn't it?
Yeah, it is particularly OpenAI, and I don't believe that we're saying that it's a massive worry and like we're really concerned about it. I think Jordan especially was just trying to make clear what like the actual the perception on Wall Street is, and what sort of like the general analyst viewpoint is, and what like the financial sector's viewpoint is, rather than saying we personally agree that it's a terrible deal or something. So.
And a quick question, lads, before we move on to Meta. If OpenAI was on the stock market right now, so it was a stock that you could buy, would you two buy it?
No, personally not, because I think it'd be very expensive. But I really want them to go public because I want us to see their earnings. I want us to see the numbers. Right now, we don't know a lot apart from 20 billion revenue, 1.3 trillion committed spend. And like, of course, there are some other numbers available too, but I think we really need to get into the nitty gritty. I think yesterday, Aiden on the Discord was talking about this, and I said we need to see at least 4 quarters of earnings from OpenAI, good quarters, and really get to grips with what Sam Altman's doing, what spending commitments they got, and is it sustainable or not? Because it doesn't look sustainable right now. But also, I'm personally not betting against Sam Altman, and I'm personally definitely not betting against OpenAI in general.
Yeah,
Sure.
no, I think what you said I was reading what you was putting in the Discord. I think you bang on the money. If they IPO, I feel like I would, but again, this is where your LLMs come into it. I'll find ChatGPT very, very, very useful. I use it a lot for everything, breaking down all sorts of stuff, and sometimes it's just everyday life stuff as well. Even if I'm at the gym and trying to sort out a split for that day, I'll put my mindset can be very messy, so I can chuck my mindset into it, and then it makes it understandable. So yeah, I think if they IPO'd, I probably want to invest straight away, because obviously everybody would FOMO into that very heavily, but it is a company that I do like a lot.
Yeah, exactly that for me. I think the IPO initially would be very expensive, same as SpaceX. I'd be more interested in SpaceX personally than OpenAI. I'd just be watching to see, I guess similar to Will, I want to see some actual real numbers before I work out and decide what the valuation looks like for my own opinion of it. But the initial IPO, I don't think I'd have any interest in, because I think there'd be so much hype around it. As much as there's lots of hesitancy, I think there'll also be so much hype that it will be overpriced initially, as a lot of IPOs often are. I think more often than not, they do start off really high and then come down a bit, then balance out. And I think, as we mentioned a little bit earlier, just sometimes you don't always need to do something. You can just wait, and often giving yourself a little bit of time to have some more information come in and to mull over your opinion, your decision, to see if it is what you are really confident on, can pay off in the long run if you sort of practice that approach.
You got anything else to touch on that, Will?
Well, I just want to actually skip ahead to Tesla, because I think right now we're sort of talking a little bit about what we were talking about. So can you just go to my screen, Jay?
Yep. There you go.
So I will come back to Meta, but I think I want to just talk a little bit about Tesla, because we are talking about IPOs. So the news came out that SpaceX is in talks to merge with XAI before the end of this year. So I think in June, July is when the IPO is supposed to be. I think it aligns with I can't remember now, like a solstice or some kind of star galaxy event.
It's his birthday as well.
Yeah, exactly. And it's also near his birthday. But then they came out and said, well, actually, it might not be SpaceX who merges with XAI. It might be that XAI merges with Tesla. And I think ultimately we all probably suspected that eventually Elon Musk would bring all 3 of his main companies under one umbrella. And Tevis here has just broken down a little bit about because of the way his tranches work with getting the stock price to a certain amount and how much control he wants over different parts of the companies, it is interesting about how effectively, if he does this in a certain tactical way, if he does eventually bring all three companies under one, maybe he calls it Elon Musk Industries or X Industries, or whatever he calls it, and then it's Tesla, XAI, SpaceX, then he will massively increase his controlling stake over them. Because right now, is it that he doesn't have a single? No, sorry, it's Tesla. This earnings finally announced that I think they're buying $2 billion worth of SpaceX, because right now they don't own any SpaceX. So I think he just wants to have a lot more control over these companies. So that's going to be a very interesting IPO, the SpaceX IPO. Who they're going to merge with? Will it be Tesla? And obviously Rocket Lab, ASTS, other companies, like they're getting a real catalyst, a real tailwind, a real sympathy pump on that kind of space theme as well, sort of really pushed forward by SpaceX. So it's going to be really interesting. I don't have many details to go for the earnings on Tesla. Just it is interesting to see that they are closing the production facilities of Tesla X and Tesla S, and they're going to move those factories over to the
The humanoid.
Optimus Prime, the robots production. So it does start to show that they're really ramping up the robot side, Optimus side, and obviously I think ultimately over the next few years, Tesla are going to be moving away from a car company to FSD, to robots, and obviously, as I've just spoken about, with maybe SpaceX and XAI, and he's talking again about massive data centers in space with solar panels. So there's a lot to keep up to date with Tesla. I'm personally not a shareholder. I know you two aren't either, are you? But I think Tesla's just a really interesting company just to see what the hell he does, because it is very interesting and there's just so much going on, isn't there?
I think on the back of what you just said, it just sort of let off a light bulb in my head a little bit. Obviously, his compensation package on Tesla was something to get the valuation to something stupid, wasn't it? Or something, and then he gets a crazy compensation.
I think it was to get the valuation to 10 trillion and he gets 1 trillion.
Yeah. So if sort of what you just said, which I thought was just like a light bulb, if they were to bring SpaceX and
XAI.
XAI under the same umbrella of the Tesla holdings of some sort, that would massively boost that valuation.
Exactly, 100%. Yeah. So he would increase his control of the companies, and it would effectively give this massive 1 to 2.5 trillion dollars worth of valuation to Tesla. So yeah, like it all kind of makes sense, and now you think absolutely without doubt he was he's been planning this for a long time, way before he really hardly pushed through his compensation package.
It is worth noting as well, the IPO to be ready in that time is very, very slim for the paperwork.
It is, yeah, it's tight.
Yeah, so it's not impossible, but it's very, very slim that they'd get there. George, do you have anything you want to touch on this, mate?
I'd echo the same. My opinion of Tesla as a stock pick hasn't been overly positive for a while. I think it has been really highly valued at a premium. And has had quite a bit of sort of hype come into the stock, which I try to avoid as best as I can. But I do think, even just as outside of the monetary gain, being able to invest in something like SpaceX is very exciting. It's a very cool stock to be able to invest and buy into. It's definitely more exciting than like a financial stock, as much as they might be great picks. It's still about numbers and revenue and interest and all that sort of thing. And to have something like SpaceX public, if it does go public, is pretty exciting just as a general being an investor and having the opportunity to. And it's, even if I'm not invested in it, it's a stock and a company that I'll be watching closely just in terms of what they do manage to achieve. So,
and putting price tags aside, when humanoid robots become a viable product, obviously we'll probably see that in our lifetime. Would you guys buy one?
Yeah.
Will it have like 10 around the manor?
I think it's a no-brainer, to be honest.
Yeah, I think I would as well. But at the same time, I say that, and what our results of it just gives iRobot vibes. Like,
It does.
but yeah, I would too. I mean, what about Tesla? Would you guys buy a Tesla?
Not me personally.
No, I've got too many stocks, and it is expensive. I do want to be part
I mean,
of the
within
journey.
the
Like,
car. I mean, within the car, not the stock, like the products.
oh, I like a Tesla. I think FSD looks incredible. Like, if FSD is a fully comes out in the UK, yeah, I mean, it's definitely what to think about.
I like Teslas. I like the look of some of them, and I like the ones where the doors go up and stuff. I had an Uber one time, and I got out, and I thought that car's class. I like how the screens work, how they pick up pedestrians, and they pick up cones, and they pick up
Yeah.
everything. I like the tech. I don't like how it's electric and you can be turned off, or you're told no, or you can be refused updates or stuff. I mean, I just get a bit skeptical about that stuff. But I think eventually in my lifetime, I'll have a Tesla as well as a normal Mercedes as well. I don't think I'll ever sway away from that side of brand after having it. It's just so comfortable. Is there anything else you guys want to touch on Tesla, or do you want to move on to Meta?
No, let's go straight to Meta.
Let's go
So,
on to Meta. I know you love Meta. Well, look how excited he was to touch on Meta.
yeah, well,
then.
also I just want to make sure that we get like everything in as well, because timing wise. So, Meta had a good earnings, revenue up 24% year over year, EPS $8.88 per share, which beat the expectations. Users now up to 3.58 billion people use at least one of Facebook, Instagram, WhatsApp, or Threads every single day, which is it's just crazy, really. Like, that is a huge reach of one company. Ad growth, ad impressions grew by 18%, and the average price per ad grew by 6%. Guiding now plus 30% year over year growth, which is absolutely gigantic. So if we just go back 3 months and look at the last earnings, obviously I think we probably remember the massive EPS miss. So we missed by 84%. That was due. Well, that was right here, as you can see. That was due to a tax write-off. I think it was $18 billion one-off charge. So they've now brought their actual tax rate down to between sort of 10 and 12%. So it was definitely worth paying off that large amount last time, even though it really affected the share price. I think the algos saw this disgusting miss and took it down, and then like the sentiment on Wall Street dropped, and I think there are a lot of questions forming over what is Mark Zuckerberg doing with this crazy amount of capex, because they don't have a massive cloud like AWS or a GCP, and like, where is all the revenue coming from spending billions and billions and billions on AMD and other companies' chips? Well, I think he's mostly cleared that up this time in one sense, because now capex is guiding for 2026 between 115 and 135 billion, which is absolutely gigantic. But at the moment, he has controlled the narrative, and it's basically looking like that he's going to use the capex to continue with the AI advertising business, because I think some analysts and some people do want Meta to branch out to, to really be at the forefront of wearables, of the glasses, which they are, and that side of the business is definitely growing. But I think they wanted to take it to the next level, because that's a hell of a lot of a compute, and I think some people still expect Meta to be doing more than just ads with all that compute. But for now, they're bringing in a lot more money. The stock pumped on the earnings, and I think for now, Zuck has got the sentiment, the narrative under control, because essentially he said, "Look, well, we're creating ads for cheaper. They're better scope for people, because like, we're using AI, and that they're better targeting, and they're working better." And for now, I think that narrative is working. Revenues up, it continues to grow up. Like, look at this wonderful site you see on any good company, and I think that you want to be a part of it. Operating profit is back up. Obviously, Q4 is always big because of Christmas, because of Thanksgiving, etc. But all in all, Meta are doing really well at the moment. I think it's just keeping a hold of that narrative about what is going to happen with the capex, and is the advertising side of the business enough to justify all of that humongous capex. One final point is that the Reality Labs, he said that 2026 should be the peak of the losses. So from next year, we should begin to be losing less and less money every single year, hopefully eventually making money. I think there were some reports about losing 10, 20,000 members of staff who work in that division. So I think it's a great company. I think anything under 600 was a great time to buy. My average is about 610 now, 615. I think the way is up. It's just really keeping control of that narrative about what we're spending the huge amount of capex on, and if it is mostly advertising, is that going to bring in enough revenue and profits? And so far, it looks like it is. And as I mentioned earlier, it will be good to see about where we go with the wearables and the glasses and everything, competing with Apple, Google, and OpenAI as well. I'm done.
Oh, sorry, man. I put you frozen. Yeah, no. So, George, you got anything to add to that?
No, I think we'll hit everything on the head. I think I'm invested in Meta as well myself. I was from a TA side. I was looking more at the 200 moving average. So when they had that big drop from the EPS miss, waited a few days for things to sort of calm down a little bit. I think my average is maybe about 620-ish, I want to say. Then I was going to buy a lot more if it did come down to if it reclaimed its 200 moving average, which it came down below. So if it does get to that, I'll be loading up more again. So actually that's a case of it being lower than that now, and it'll get up to a higher share price as what I'd buy up. I'm just using that as a positive bullish signal for it to reclaim its 200 moving average as a support. As a fundamentally, the stock, there is lots of growth there. The numbers are really impressive, as Will said. Like the amount of users they have around the world is just crazy. And I think with that comes a big opportunity in the future where they can increase sort of their margins and their profits from each individual person. You know, they've already got that reach. They've already got almost 4 billion people in some way involved in their products. So they've already got their reach. They can from there much easier sort of have a stepping stone of generating more revenue from each of those users rather than needing to have more revenue per person but reaching less people. I think it's harder to reach more people than it is to revenue. So they're in a good spot for more continued growth in my view, and bullish long term for sure.
Yeah, so I think you both knocked it on the head with everything. Meta, are you happy to move on to SoFi?
Yeah, I think we just fly through SoFi because we don't go on for too long, do we?
Yeah. So, have you got SoFi, or do you want me to?
I'm not sure I've got the numbers, but we can just talk about it, to be fair.
Yeah.
Or oh yeah, perfect. Cool. George?
So I've been in SoFi for a little while now, so it's kind of like a little bit of a legacy position for me. I think I got in around 7 or 8, averaged up to 12 when they had lots of dips, and then not early this year, we're in 2026, so around mid of 2025, maybe a little bit further than that, sold a lot of my position, sort of left the initial cash to run. But yeah, I mean they hit some really nice appealing milestones this quarter. I think they just got their first 1 billion plus quarter, which is a big milestone to surpass. And there's for sure, I don't think you can undermine the psychological sort of impact and benefit of hitting those large numbers for the first time and almost feeling like you've made that level now and you can spring on to the next one, sort of thing. So I think the psychological side of that is big, really big positive. Their membership numbers are growing more and more, and again, as I just said for Meta, the reaching the individual people is really important, and I think more so than how much you generate per person or per user that you have. And the loans grew really well. I think I'd like to see in the near future their profit margins expand more. So on that flow chart that you can see, of course, it being way more weighted to the green than the reds, and that's something that will naturally shift over. But all really positive. I do think SoFi repeatedly put out positive earnings. They repeatedly beat expectations. Jay, you said in the server just before earnings, ironically, they all seem to have their earnings at a weird time in terms of macro news and other stuff, hitting it down a little bit. I think that SoFi is just one of them stocks where, although it's still really a growth stock and still quite early on in its journey, it does just consistently tick along with similar sort of growth, and if anything, accelerated growth in some metrics. So I'm still really happy holding SoFi. As I say, I took profit on it already, left most of the part of the position left to just run, and the way I'm looking at it now, it'll be running for quite a while.
Yeah.
I'll let you touch on it last, Will, because you'll have the most in-depth data. So SoFi for me is something that I obviously, with all three of us, own SoFi. I think it's great. I liked what they did, like you said, the 1 billion number. I liked everything that they were doing. I would like to see more growth in the tech sector. Obviously, that's where the big red flag is at the moment with SoFi. The 90% ticking all the boxes. Same with you, George. Got in this at 18. Got my average down to like 13. Sold a little bit for profit, but holding some. It's SoFi's just one like you can leave in the background ticking, and it just, you know, it's going to do great results all the time. Will, I know you'll have a more in-depth answer than mine, so I'll let you take over, my mate.
Yeah, I think SoFi is a great example of just reading the data, looking at the earnings report, taking in everything Antonotto says, and assessing it from that, rather than looking at the candles, looking at the ticker, and thinking, Jesus, why is it going down? Because yeah, it had a horrible day on Friday. I think it was down almost 8-9% in the end, but I think a lot of that got swept in with the Kevin Walsh news, with the metals shock, with the general macro uncertainties, because obviously SoFi does do better when there is lower rates. It can do more loan originations. I do think you are right, Jay, that some of that downward pressure is from the lack of growth in the tech side of the business. But overall, I don't think it's anything to worry about it going down to the mid 22s per share. I think it's just about looking at all the great numbers they did, the record members added, the record revenue, all the beats. Yeah, I can read out all the numbers, but I don't want to just be reading out numbers. Basically, SoFi had a great quarter. Ignore the share price. If anything, I believe in Noto more. Ben made a great point in the server that because I didn't quite catch it, even though I was listening to the earnings call, that Noto basically said that I'm here until I not quite die, but essentially till I die, or in until I want to stop working. Like, he is committed. He is bullish SoFi. I think he's frustrated at some of the downwards pressure the big banks put on SoFi, and like the murkiness they are around the analyst reports and some like the ridiculous price targets. But I think he wants to take on Wall Street. I think he wants to do really well for the stock, for the shareholders. I think he wants to do really, really well for the business. He will be a little bit annoyed that he didn't hit the RPUs for the 35 tranche and the $45 tranche. Surely not by June. I mean, maybe he will hit the $35 one. It's got to be 3-month average of at least $35 by, I think, early June. So that's possible. I think I'd be frustrated for that, but more so for his team, who won't get that payout of shares and compensation rather than himself. He does seem really committed, and I think this is a great long-term steady hold. It might be that we trend sideways for another few months, and there might be some people in our community on X and YouTube criticizing the stock, but ultimately the numbers are fantastic. I think it's a long-term steady hold. Don't check the share price kind of stock, and just know in 5 years' time we'll be doing really, really well.
And to touch on that, there's two things I want to touch on. For the last year, we're still up like 40%. I think I just checked and seen. We're like still up like 40% for the last year, which is absolutely great in regards to growth. And secondly, with the analyst stuff that you just said, Will, I think sometimes it's an ignore the noise type of thing. So just forget about the noise, forget about that. Because if you actually look in the back door of these people who are downgrading and stuff with SoFi, they're actually loading up on shares. So why would you be downvoting something if you're buying more? Sometimes it's ignore the noise, conviction in what you hold, know what you hold, and think long term. I think some people think too much short term. Look at where SoFi was a year ago and look where it is now. You know what I mean? It's good. Let's keep waiting for the years to come and unroll. I think, like George said, it's still very early-ish days for SoFi. They're still a massive company, but it's still early days, and there's a lot more to come from SoFi in the future.
I can't remember who it was. One of the big banks, they have a price target, and I know in the most recent filings it showed they bought loads and loads of shares, and funny enough they bought them at a share price above their price target, which either means their analysts and their investment analysts who make the decisions are the worst in the world, or their price target isn't the realistic price target that they think SoFi is aiming for, because otherwise why would they be buying so much of SoFi at a higher price than they've even themselves said to expect? So I think that tells you everything you need to know.
Yeah, absolutely. I think particularly with SoFi, take the price targets with the biggest pinch of salt you can possibly do, because it's basically a load of complete nonsense. But it is worth reading the actual reports, because you get a good understanding of like where their head's at. But just completely ignore the price targets. They're a complete load of waste of time. I'm really happy for the quarter. If we're still super low on Monday, if we're low 22s, 21s, low 23s, I'm buying more. I absolutely love this company.
It would take me for it to hit 20. That's where my price targets are with it. I don't want it to go there, but I've got buys set at 20. That's where it'd take me to buy more. I'm happy with my position I've got. So it would take that for me to want to buy more, but I'm happy with the shares I've got to let it ride. Is there anything else we want to touch on this, lads?
No.
Someone just said Will sounds like Ben's finance. I couldn't think that's any further from it. To be fair, no. I remember saying that to you, Will, actually on voice now. It's actually, so I'll take that comment back.
I think about 5 or 6 people now have actually said that I do sound a bit like Ben.
So we'll touch on earnings first before we touch on macro, because it's easier for me to pull that up right now. So earnings next week, huge week. Will, do you want to run this one?
Palantir, I'm really looking forward to tomorrow seeing what Palantir do. I expect big growth, obviously not as much as they have been, because they can't just go on forever, like the rule of big numbers. Palantir's a big one. Amy's a big one for us and the server as well. And then, Jordan, I'm sure your eyes went straight to Thursday after close. Alphabet on Wednesday, and then Amazon's. I mean, of course, there's Iran, there's Arm, there's Lilly, there's loads of massive companies next week. But I think for me, the 4 really big ones I'll be looking at: Palantir, AMD, Alphabet, Amazon. I'm sure, Jay, you're looking at PayPal as well.
I was about to say, don't just jump over PayPal there. Yeah, I think there's some huge. I mean, obviously, like you say, you got your Iran. The next week is just so busy.
It's jam packed, yeah.
Yeah, it like I say, there's going to be so much to pay attention to. I mean, I love earnings season. I love the 13F season. I love it all, but sometimes it's a lot. So, I like to say, George, what's your point on this? What I know you're looking at, obviously, Google and stuff.
Yeah, obviously, big focus on Wednesday, excluding that one slightly below Google. Stupid stuff. I think, to be fair, this week feels a little bit more spread out than last, which is quite nice. We get a little bit more time in between to digest each one. But there's big ones every single day, plenty that I'm invested in myself and looking forward to it. I think I said a little bit before about using Meta and Google sort of alternating with each other as slight indicators of the other one. And Meta's advertising revenue was really strong, so I expect the same for Google, having an even bigger market share of sort of the advertising sector. And then we've also seen strong cloud revenue growth with those who have their own sort of cloud sort of sectors of their company. So again, I expect the same for Google Cloud, which has had really strong accelerated growth recently. And then you've got the biggest cloud provider, Amazon, on Thursday. So also really interested to see how their numbers match up. Amazon, of the 3 big ones, Amazon, Google, Microsoft, has been the slower growth in terms of numbers, but it's already got a larger market share than the other 2. So it's kind of, although it's got a slower percentage growth, it's still growing more in actual real numbers than those. It's just interesting to see how those sort of 3 balance in that data center space. But yeah, of course, for me, the big focus is Google on Wednesday, and I'll put some sort of predictions and briefings in the Discord server for anyone who's in there ahead of those earnings.
And obviously, you'll be doing a breakdown of Google next week anyway, won't you? So obviously, I'm very interested for PayPal to see what they put up. It's very interesting zones for PayPal. They're actually at their 52-week low. They seen that deal with OpenAI come out, raised to 72, I think it was a share, then came straight back down like instantly. I don't know if a lot of people took profit at that market to get out of PayPal. I'm not sure. I know a lot of people have been holding it, and a lot of people will be bleeding. So it's going to be very interesting to see that. Will, I have seen Galaxy on there. Did you invest in Galaxy in the end?
No, I didn't. No, I just got caught up with so many stocks recently that I think even some of the ones I said, oh yeah, I wouldn't mind going to that. They've done really well, but no, I will look out for Galaxy's earnings, but no, I'm not personally invested in them.
No, that's fine. Is there anything else you want to touch on this, guys, or do you want to have a look at the macro for next week?
Let's go macro.
Let's go macro. So obviously, if you aren't in the Discord, this gets shared by me and Will every week. We spend a lot of time putting in the earnings. We put in macro data. A lot of people share news. Obviously, everybody does that. But yeah, so there's a lot of stuff in here. So key events for next week. Will, what are we feeling on it?
I mean, jolts are important for sure. Jolts do affect jolts do affect SPY. Jolts are important one to look out for. But honestly, I think mostly it's earnings for me next week. I think that the other macro data points are important, but I think I'll be very interested to see in an hour and 20 minutes what the futures are, what the weekend trading's been like and everything for the SPY and the NASDAQ, and see how we open tomorrow as well on the Walsh news and how precious metals do next week. But yeah, definitely jolts are important. And then, yeah, Google and Amazon for sure. I'm very looking forward to see how they do.
And yourself, George?
Yeah, I'd say similar. This week is maybe even a slightly bigger week on earnings, maybe just about to say from last. But whereas last week had a lot of sort of announcements and seeing how different issues in the US were progressing and stuff, this one feels like there's a little bit less of it. So the earnings are dominating sort of what I'm anticipating come out this week for sure, the same as me. So just excited to see how those go. But then the only sad part is then it's another 3 months after that.
Yeah.
Like I said, I just think there's a lot going on. You've got some numbers coming in. Obviously, they're important. You've got a lot of earnings, a lot of things to track, a lot of things going on. So it's definitely, and obviously then we've got the government shutdown stuff happening on Monday, stuff to pay attention to. And there's obviously a lot more noise in the market at the moment with other things happening in the news and stuff. So I think that is that. So if I remember correctly, look forward to it. That's very good. So predictions for the week ahead, lads. So let's pull that back up. So obviously, I am saying this week we finish green. What are you saying, boys?
Yeah, I think I'm following the same logic we all went with last week, where I think we'll open badly again tomorrow, and then I think we'll just about go green by the end of the week. So I'm going to say green again for my 4th week running.
My thing is, I want to say green because I mean, even just as an overall, there's so many more green weeks than there are red. But past it is a weird feeling that I want to say red. I just feel like I think we will open slightly lower than the close of last week, but I don't think it's going to be low enough where the same thing will repeat again. I'm pretty on the fence, but I will think I'll adjust just so slightly go red.
And John was green, wasn't he, Will?
Yeah.
So the reason I go green as well is because I think we're going to open lower, and that's why people might hear us and go, hey, do you think we're going to end up green next week? And it's more because you're thinking where it starts to where it finishes, more how the market performs as a whole. Yeah. I think we'll finish green because I think we'll start under an earnings. I'm hoping we'll prop that number up. In regards to stream, guys, so obviously we do really, really appreciate your support. So let's get the streams vote. By the way, we're growing week on week, which is great. We've got 80 votes on this week's poll. So it's growing every week. And the poll is 60% red, 40% green. So I've just ended that now. So the stream has gone for a red week again. Very bearish watchers. So yeah, so obviously the stream has gone for red. Jordan has gone for red. Me, Will, and John have all gone green. So this is where we start seeing a separation there in the result. So it'll be interesting to see. Lads, have you got anything else to touch on the back of that? Obviously next week we're going to be talking about the small caps. We're going to be talking about some stuff around that we got. Obviously I know a lot of people are feeling a lot of pain at the moment. Is there anything, lads, you want to add into that?
Not from my side.
Anything from you, Will?
My monitor just turned off, but I know I do want to say just thank you for listening, everyone. Thank you for being here. I really enjoyed today's. I really enjoyed today's stream, and And yeah, like there's just so much macro going on. It's great to talk about it. Hopefully the breakdown was in a easy to understand way, and I think there's going to be a lot happening next week. So we'll see you guys again next week for some more macro, some earnings, a debate, and see how Kevin Walsh settles into the nomination.
And if you do like this format and you haven't heard it all, or you do want to listen to it when you're out and about, obviously the Spotify link is in the description, I believe. If it's not, it's One Big Journey on the Spotify. So yeah, thank you everybody for your time. Like I said, we've been a long stream today, so we appreciate everybody tuning in and listening to us. So thank you very much, and we'll see you again next week.
Thanks, guys. Bye-bye.
Cheers. Take care.